Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here today on the first trading day of the year, January 2nd, 2020, with a little webinar for you, and we have some Forex trading setups for you that we're going to look at. But before we do that, we want to quickly go to our disclaimer first, just to remind you that this is for illustrative purposes only. And with that, we will jump to our live trading screen, and we are going to take a look at the Euro US dollar right now that is shaping up with a bearish engulfing line to start off the first day of the trading year. You can see that the market topped out on New Year's Eve, and since opening up today, it opened and has just traded lower for the bulk of the session today. Right now, we still have another couple hours before it close, so we don't want to get ahead of ourselves, but if the market settles where it is at right now or even lower, then that will confirm a bearish engulfing line. So that is a very bearish sell signal that definitely has the breaks coming on this current rally. The high from New Year's Eve would be our risk level for any bearish trades setups that you would like to potentially manage if you like this sell signal, or if you have other reasons to sell it. Now the market has been in an overall bull market since the beginning of October. You've made a series of higher move highs and higher move lows, and we had a really nice run up over the holidays. Now remember, we haven't seen much volatility in the Euro US dollar until actually the holiday market last week, with a very nice extreme rally 3 sessions back. So for right now, for a little pullback, it looks like a little profit taking. I wouldn't be that aggressive of a bear. It wouldn't take much to get the market back up towards its highs, so use caution. Remember the high from New Year's Eve, that's what we're looking for your risk level. But right now we have these two little circles here that I've drawn in. The first is on this steeper upward sloping support line where the more intermediate short-term trend is riding, and I think that this is a good little spot where you could see the market retrace down to from this current slide that we have unfolding in the Euro US dollar. And then this last higher move low, I think this pivot here to $10.67, this would be the extreme, I think, for any slide. A failure from here definitely starts to put this market on edge. So if you are trading the Euro US dollar and you like this sell signal, or you want to learn more, if you're watching us on YouTube, just subscribe to us and leave a comment at the in the comment section, and we will get back to you in our next video, because we're going to have follow-up videos on these trading signals for January 3rd and as they unfold. Then we're going to manage these and see what happens with them. So right now we have, we're looking for this first trading signal of the year, the Euro US dollar, a short-term corrective bearish trading signal forming up that we have to wait for confirmation on the close. And then if it does settle down there this afternoon, then like I said, we have our first target area down here right around $11.08, and then with $10.67 being the extreme for any downward slide. Now we do have Brexit coming up, so don't get too crazy and think you're going to have too much of a move in either the euro or the pound, just because of the politics that are going on. Now the pound US dollar did make a nice little run up for the holidays. It had a buy signal off of this last higher move low that's called a 3 inside up buy pattern, and it actually topped out on New Year's Eve and hit through the target actually a little bit. So right now that has this market pretty much out of gas for that buy signal. The market isn't an overall uptrend, it is a bull, so you don't want to fade it, but I'd be very careful selling into it right now. Like right now, this high of New Year's could be the high for a while. Maybe that's a lower move high before we touch off lower move lows. But first things first, right now we have these two slopes that the market has been rallying on for months. Both of them are not too steep, and this last higher move low, I think where this is coming in, this is a nice little trend line for the market to bounce off of. So you have this first little downside target here where this pivot of $1.3040 is, and I think that's about where you're going to see the market pretty much settle and start to move sideways as we head into Brexit. And then we have this $1.29 lower pivot down here where I have as our longer term potential sell-off target. Anything below here, we take out this higher move low, which puts us in a neutral to lower base bias, not necessarily lower, but definitely neutral. And this market could start to go sideways, especially because we have Brexit that's coming up at the end of the month. In fact, just to show you where Brexit comes in, It is on the 31st, so right there, where this black horizontal line is, this is where Brexit comes in. So I think that you might have a little bit of a swing trade going on for the next couple sessions, but not very much. Really not a sell signal there as far as that market is shaping up. Now we do have another European market where we do have something going on. We have the US dollar Swiss, which has been pretty much following the dollar for quite some time. This is like a balloon underwater. We have a positive close here, especially up where it's at here. I think the dollar index will be set for a nice little corrective rally, not a bull rally, just a corrective rally, meaning it's going against this bear trend right now. So it's short-term bull, but not a bull. Just looking for a little bit of a reprieve and profit-taking move. So I think the US dollar Swiss has a good chance of getting back up to this 98-cent level, maybe even 98.5. That I think is your extreme. So we want to look at the Australian dollar, US dollar. So that's the AUDUSD. Because we're looking for another trade. So we have a sell signal in the euro US dollar that's setting up. We have a buy signal that's setting up in the US dollar Swiss. The pound, not necessarily. We have a signal that ran out of gas, hit its target, and it's not really setting up for a sell. So plus with Brexit, I'd use caution with that one. We have another bearish engulfing line here. The Australian dollar, US dollar, topped out on New Year's Eve and is doing the same thing like the euro, and we like this trade too. If it stays lower like this, then we're looking for a bearish engulfing line sell signal that's going to target this lower band over here, targeting this first upward sloping blue line. As far as major downside targets, you have to get down to this 68.35, take out this other blue support line before you really start to get bearish and put this market on edge. So I think, like I said, that the dollar index has this corrective mode that it's in short term, and this can be profit taking, nice little corrective scenario, but I would look to buy this market again. But short term right now, if you are a bull, now is a great time to take profits, especially if we settle about where it's at now or lower before at the end of the day for the rollover into Friday's trading. Then that is a confirmed bearish engulfing signal, which if you are a bull, it's a great time to not necessarily get out, but I would take some profits and then look to buy the market back later, because like I said, I don't think that this is the beginning of a bearish trend. It's just the beginning of a bearish correction that's probably not going to last more than about a week and a half. And then, because then we'll be coming into where the US-China trade deal comes into play. That is big for this market. So like we had Brexit marked over there. Here's January 15th, so it's not that far for us to get there. So if we have the market correct now to back down here and come back towards this probably 69.20 area, somewhere between 69.5 and 69 even, somewhere like right around in this zone right here, that would be a nice little spot for this market to correct back into and then start to ride this trend higher as we move forward into January and into the first quarter of 2020. Now we do have another market that's shaping up with a sell signal. And this is another Japanese candlestick pattern. All of these right now that we've been discussing are just Japanese candlestick patterns. This one here, we have another bearish engulfing line set up in the New Zealand dollar, US dollar. Same thing, if it closes around where it's at right now or lower, we have that's an indication that this is going to continue to correct for the next few sessions, maybe even to the next week and a half, which coincides with a dollar rally. So all these sell signals and buy signals are actually going with the short-term rally beginning in the US dollar, and it's set up for a corrective rally anyhow since it's been breaking for so long. So that gives us all these bells and whistles saying, hey, the dollar is up for a correction. It's showing signs that it wants to put the brakes on this current slide and at least take some profit and get a little bit of strength back in the dollar, even if it's for a short term. Well, all these other currencies, they've exhausted their moves against the dollar. It's time for them to take profit and do the same. So we have a lot of currencies that are all lining up today for the start the beginning of the year. You don't have this very often, folks. So when this happens, it's time to jump on them all and take advantage of the opportunities. And at the very least, you know your risk. So if you still are a bull, you know if you take out the high from New Year's Eve, the sell signal is negated and we're off and running. So if it wasn't for the fact that we're getting such a strong sell today and it's shaping up like this, and all these other markets have these sell signals and buy signals going off against the dollar, I would say don't even begin to try and fade this rally in the New Zealand dollar, US dollar. So, excuse me, so we've covered a whole bunch of markets here really quick. to start the year off, and we've been talking about high probable Japanese candlestick patterns. We had a couple bearish engulfing lines that have set up in our beginning, and we also have some bullish trades too. So we have the US dollar Canada looking for a buy. We have the US dollar Swiss also looking for a buy. We have the Australian dollar US dollar looking to sell it. We have the New Zealand dollar US dollar looking to sell it. And we even have the Euro US dollar, which we are looking to sell as well. So if you want to learn how to use these patterns, you can either subscribe to our YouTube channel, because then you'll know when we keep telling you about these signals, especially later on tonight after they've been confirmed, and then we can get into how to manage the trade. Or you can read the book, High Probable Japanese Candlestick Patterns, that I've written. It's available on Amazon in paperback and Kindle version, and through it you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the Forex markets, the futures markets, the options markets. These patterns work in all markets, so it's just a matter. And you can use correlative trades too, where you get a signal in the currencies, and then all of a sudden you're trading an ETF a certain way. So with that being said, we're going to put up our logo here. We just gave you an indication of some Forex trading signals that are going on and some setups in the market. They have to be confirmed later on today. They are not done yet, so we don't want to jump the gun, but we are almost there. So look forward to us later on. If you're watching this video, subscribe to us on YouTube, and then you can know when we come out with the videos later to tell you how to manage all of these trades and what we're doing with it in the Forex, the futures, and the options markets. Thank you very much. I'm Teddy Keckstedt from